Good morning, guys. I got a little oil news off the Zero Hedge. I'm going to read it to you while Jose's getting me ready. But it's hard to see the paper out here with the sun beating me in the face, so I'm going to get in the truck, and while I read it to you, you're going to get to watch me work. I hope you like it because I'm running out of time. Let's go. Before I get started, smash that like button and subscribe. Thanks, guys. The title is Brace for High Oil Prices, Inflation, and Economic Slowdown. This is off the Zero Hedge. I'm going to leave it on my Telegram if you care to read it for yourself. With Brent crude climbing steadily towards $130 a barrel, fears of economic slowdown and even a slip into recession have reared their heads among traders, very likely reinforced by warnings of food supply troubles because of the war in Ukraine. It seems likely everything is going wrong at the same time. Oil prices soared as soon as Russia invaded Ukraine in what is euphemistically called a special military operation aimed at demilitarizing its eastern neighbor. As the conflict escalated and the West began implementing sanctions on Moscow, fears grew over potential action against Russia's oil industry, which supplies around 7% of the world's crude and its biggest exporter of crude oil and oil products taken together. Talks about oil sanctions marked the start of the week, and the market response was sharp rise in oil prices. So far, nothing surprising. According to data about hedge fund buying activity in oil contracts, however, there are fears of global economic slowdown, and while also unsurprising, this is most unwelcome. The industry remained very bullish on oil, with the ratio to bearish positions at 7-1. This ratio signals that hedge funds are following recent geopolitical events in Europe closely, but they will be watching for more demand destruction as oil prices remain elevated. As oil prices rise, eventually they tend to reach a certain point with demand destruction begins either through fuel conservation or simply because expensive fuels make everything else more expensive and discourage spending. Yet such a trend would come at a very bad time for the world economies. While news about COVID-19 all but dried up overnight with the Ukraine invasion, economies are still struggling with the pandemic. The United States, the world's largest oil consumer as well as producer, booked an inflation rate of 7.5% for January, the highest in almost 40 years. Meanwhile, oil is not the only commodity on the rise. Wheat prices hit a record high amid the Russian-Ukraine conflict as the two are major export. Russia, the world's largest exporter of the staple, has been heavily sanctioned in ways that can make it change to lift wheat cargoes from the country. The 50% jump in wheat prices since the start of the invasion is making wheat more unaffordable. Add food insecurity to soaring oil prices and a recession looks increasingly likely for many economies. Perhaps even worse in the fact that, according to some analysts, this is not the end of the rally for oil. For instance, forecast oil could stabilize around $125 a barrel unless the war drags on, which in case disrupts to global supply would persist, pushing oil to $150 a barrel. According to Russia's Deputy Prime Minister Alexander Novak, if the West sanctions Russian oil exports, the price for the commodity could reach $300 a barrel. And though this is quite an unlikely scenario, in reality, oil prices do seem to have quite a while left to rise. The way things are going now, $200 a barrel is clearly possible, according to Jeffrey Gundlach. We talked about that yesterday. Gundlach said that oil is on its way to $200 and the Fed may be pressed to raise rates while the country is going through a recession, which he has noted had never been done before. Gundlach also said it was time to admit the U.S. was going into stagflation, and the latest increase in gas prices was only the beginning of the... He mentioned stagflation, and it's really strange to think about stagflation while the currency is inflating. So it might be a real strange environment where everything's not doing very well, and everything's expensive. It's going to be really weird, and oil's definitely going to be one of them. If you like me reading these Zero Hedges, because you can just be driving down the road listening to me, and I'm going to put more of these up if I get some good positive feedback. So y'all have an awesome day. Later.